I am near-term bearish on gold. I think there's a very good chance that this narrative, this appearance of victory against inflation while the Fed keeps rates high, that is classic bearish for gold. I think that sets gold up for a higher levels later, but in the near term, I'm sorry, gold bugs, I don't want to rain on your parade too, but I'm not here to tell you what you want to hear. I'm here to tell you what I think, and to the best of my ability, I think that there is a real danger of downside for gold in the near term, probably hurt silver as well. And maybe the central banks will save us.
Lobo Tiggre is a well-known figure in the financial industry, particularly within the resource sector and investment community. He is often referred to as the Independent Speculator. In today's video, Lobo explains that he is near-term bearish on precious metals as he expects further downside for gold and possibly impact silver too. At the beginning of this week's trading, gold futures declined as investors kept their eyes on the U.S. monetary policy meeting this week. The yellow metal was also pressured by the rise of the U.S. dollar. However, investors believe that the price of the yellow metal will probably trade in the $1950 range this year as it fails to sustain any momentum. The precious metal dropped sharply as market participants focus on the interest rate decision by the Federal Reserve, Fed, due Wednesday. An interest rate hike of 25 basis points looks certain, but the catalyst that is haunting investors' sentiment is the guidance about future rate hikes and discussions about rate cuts. Lobo indicates that the next near-term downside price target for futures prices is to break below the firm technical support at the June low of $1,900. Meanwhile, a new BRICS currency probably isn't going to be announced in the near term, but recent geopolitical events make a gold-backed alternative to the US dollar more attractive to the bloc, according to Lobo Tiggre. Tiggre said he believes the statements from Anil Suklal, the South African ambassador to BRICS. There's never been talk of a BRICS currency, it's not on the agenda for the August summit in Johannesburg, Suklal said during a media briefing last week. If the people hosting the conference were telling you this is not on the agenda, I think that is not too much of a stretch to take that at face value, Tiggre said. As the geopolitical landscape continues to shift, traditional financial systems are facing mounting challenges, and investors worldwide are seeking safe haven options to protect their wealth. In the midst of this uncertainty, a significant event looms on the horizon, the BRICS summit set to take place in South Africa from August 22 to August 24, 2023. While Lobo also acknowledges the potential influence of central bank buying, which could counterbalance some of the negative effects on gold prices despite the challenging circumstances. We will now bring you clips of Lobo Tiggre from a recent interview with Stansberry Research. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
I'm not calling for a meltdown. I'm calling for continued weakness. I could see it easily breaking below 1900 and scaring the bejesus out of people. I suspect that we would see buying from central banks and other parties then. So I'm not convinced that it would necessarily fall off a cliff. Like there was some floor that if it fell through, it would just crash to 1500 or something. I'm not making that case. But for long-suffering gold bugs who've been saying, oh, the price of gold is high or the gold-dollar exchange ratio is high, why are my stocks low? If you're hoping that your stocks are going to catch up with gold this month or next month, that's a dangerous hope right now because there's a good chance that gold will drop back towards the stocks, and that could actually cause more of a panic in the stocks than in the metal itself. I'm sorry, I don't want to be a prophet of doom or pain here, but if anybody ever thought I was a broken clock that always said gold could only go up, well, here you are. I'm on the record saying I think in the near term there's a real chance of significant pain for particularly gold stock and silver stock holders. For the near term, it's going to look like Team Soft Landing is right and Lobo is wrong. And if Team Soft Landing is right without negative consequences for the Fed, I think that the market is wrong in thinking that the Fed will therefore loosen. I think the higher for longer, that tight policy, I think that stays in place because I think the Fed knows very well the danger that it's in. So that combination is bad for gold. If the Fed pivoted on this news, if Team Soft Landing meant that suddenly the Fed could ease up and there were easier money, that would be bad for the dollar and that would be good for gold. But if there's no recession, if Team Soft Landing seems right about that, while the Fed keeps its foot on the brake pedal, then that would be bad for gold. We see the whole world in a different way. We see gold as money, JP Morgan, everything else is credit. And the people who set the price of gold I even just said it wrong. The people whose futures trades on the COMEX or the LME are quoted as the price of gold. That's a mistake. That's not the price of gold. That's what some of these future traders are doing. And those people, very, very few of them, if any of them, I think the way you and I do, or our audience does. They are not gold bugs. They're professional, market participants, money traders, gold traders, and they're in there to make their little slice of margin on the trades. And they don't care whether the gold goes up or down. They have no ideological stake in the game at all. And so I don't think those guys or gals were all, excited that in August gold was going to go to the moon because of the BRICS announcement. I think those guys are looking at the DXY, they're looking at the Fed, they're looking at all the same variables that they always look at. And none of that's changed as you and I are speaking, or as this announcement from South Africa came out. None of those other variables that you do see having a high correlation with what I refer to as the gold-dollar exchange ratio instead of the price of gold. It's not surprising to me that it didn't move when the kinds of things that those traders pay attention to didn't move. Now, last week it did, but that's not our topic of today. But I'm saying it fits. In this is another nail in the coffin of getting too excited about some big idea that makes sense to you, but has no actual connection to what is happening in the marketplace today. If the goal is to, be a gold cheerleader and try to save the world by getting everybody back on the gold standard, sure, knock yourself out with a story. But if the goal is to make money, you have to look at what is moving prices, what is moving exchange ratios in the real world right now. And I don't think that was ever this story.
Despite recent tumultuous events, including the failure of 3 U.S. banks and concerns about financial institution stability, Lobo Tiggre maintains his belief that a recession is ongoing in the nation. Gold is highly sensitive to rising interest rates as they increase the opportunity cost of holding non-yielding bullion. While U.S. consumer confidence increased to a 2-year high in July, they remain fearful of a recession over the next year following high interest rates. Simultaneously, there is widespread support for the creation of an alternative to the SWIFT system used for bank transfers. The decision to exclude Russia from the system has politicized it, while Russia's ability to develop an alternative to it has encouraged the move to abandon it altogether. In this background, the 15th BRICS Summit 2023's top agenda of considering a new gold-backed currency, an alternative to SWIFT, clearly indicates the world's growing economy's desire to reduce reliance on the US dollar. Saudi Arabia joining BRICS would be a watershed event, he said. I think if we wake up and Saudi Arabia joins the BRICS alliance, the world would be a different world in a meaningful and significant way. Tiggre predicts more fluctuations in the gold-dollar exchange ratio, driven by Team Soft Lending's actions and central bank buying. Let's get back to interview.
I am near-term bearish on gold. I think the advent of the apparent victory of Team Soft Landing, inflation rolled over. Yes, I don't believe the CPI numbers, but those are the numbers the COMEX guys look at, right? So inflation rolled over a year ago. And core inflation has been very sticky, and that finally broke down. If core PCE breaks down as well in the next report, that will be big. That will be really big. And it will seem like Team Soft Landing is winning, right? Right now, so far, the recession denial is still in full force. So if the Fed is beating inflation without causing the recession, then it will look like that Lobo Tiggre guy was just off his rocker, got it all wrong, everything's fine. Even the bears on Wall Street, the most bearish of the mainstream types that you'll see, they're still calling for a recession, but they keep pushing it back. Oh no, well, it'll be in 2024, early 24. Now it's like late 2024. So they're moving the goalposts there, saying we're not in recession yet, and it's been postponed because of these wonderful accidents. I'm actually doubling down, as I say, on the opposite position. I think we're in a recession now. I think it's been masked by the post-COVID distortions. I mean, we had one-offs, once-in-a-century scale events We had government responses that were literally unprecedented. That's not a metaphor. I mean, it is the literal truth. Yeah. Nobody had ever done anything like that before. So that's not even a 100-year event. That is a first time in history event, some of the things that were done. The gold-backed currency idea has been around for at least 15 years, maybe more. So, it didn't correlate with that. It's accelerated in the last couple of months because of Russia saying what it said, and now, the other ones. So it didn't correlate with that either. I think it correlated with the war and with Russia getting kicked off the SWIFT system. And this isn't original to me. This isn't my great insight. I think a lot of people will agree with me on this, that, a lot of banks, central banks and governments around the world, they saw that and they're like, oh, wait a minute, even if we're friendly with the United States, we don't want them having the unilateral power to freeze our assets or seize them, or lock us out of the global trade system. So I do think that is connected. That is a real thing. What you've said is exactly true. But I think it started with the SWIFT action, and it's been accumulating since then. Now, here's a key takeaway, though, for our audience out there. I mean, think about this. I don't trust central banks as far as I could throw one. And I think 99.999% of our audience is in the same camp. We don't believe anything these central bankers say. So if I'm a gold bug and I'm going to be bullish on gold because of central bank buying, isn't that a bit of a contradiction? I'm waiting on the bad guys to save me, is what that says. So that's not really a bet I want to place, and I think we'll see that in the gold dollar exchange ratio. In fact, right now as we speak, I see very serious headwinds for gold. The apparent victory of Team Soft Landing is very bearish for gold, and yet we've seen gold prices remain stubbornly around $2,000 for much of this year. And I actually think that central bank buying is a large part of that. There have been times over this year where I thought, gold retreated, say, under 1950, and I thought that was a significant support level, and I didn't see what would hold it. Now it's become a floor, but before it was, there was no reason for it to stay there. I think if we wake up and Saudi Arabia joins the BRICS alliance, the world would be a different world in a meaningful and significant way. Now, I'm not sure what investment I would change like the next day when that happened. I'd have to see how it played out. But I think that's a big thing you've put your finger on. If that happens, I wouldn't say all bets are off, but I think all bets need to be reconsidered.
In the current financial climate, the gold market faces challenges due to factors like U.S. monetary policy and the rise of the U.S. dollar. While the possibility of a new gold-backed currency at the BRICS summit remains of interest, it's not on the agenda for the upcoming August summit. Amid geopolitical uncertainties in the financial landscape, how should investors approach safe haven options like gold and alternative currencies to safeguard their investments? Share your thoughts in comments section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.